Welcome back. You're watching Market Fatafat on ET now, and let's keep it going with the stocks that are buzzing in trade and on the technicals. Now we have Aamar Singh joining in with us. Aamar, very good afternoon, and thank you so much for joining in with us on ET now. The first stock that you've picked out for us is Hudco. When you look at it, what a move that the stock has already seen, right? In the last 6 months, almost up 140, 150%. What's the word now on Hudco? Should one actually start booking profits, or are you expecting a further run-up?
So, this is for which stock?
Hudco.
Yeah, okay. Looking at Hudco, I would say that the stock is in a very strong uptrend. We did witness the stock correct significantly towards the 200 levels, and currently it's around 320 odd levels. And what we are seeing is that over the last couple of days, the stock has witnessed significantly heavier volumes as compared to the average for the last maybe I would say 30 or 40 trading sessions. So that bodes well for the stock. And also if you look at the stock from an intermediate term trend perspective, that is also indicating bullishness, and the stock taking out the 300 level, which was earlier a zone of resistance. So that means that the stock has a potential towards the 345, 350. And now the stock has got good support coming around the 280 level. So on the downside, the stock has got good support coming around the 280, 290 zone. Whereas on the upside, it could means rally towards the 345, 350 levels. So this is one stock one can definitely keep a close watch on.
Surely a stock that one should keep on their radar and keep an eye out on that one. But let's move on and talk about Bajaj Finance. Why is that in focus? It came out with its Q1 update. AUM grew by 31% on a year-on-year basis. We are seeing overall that they managed to see a strong growth in terms of AUM, customer acquisition. RBI restriction was different from the 2nd of May. Morgan Stanley also came out with a note on it. They maintained their overweight rating. Target price they gave was 9,000 rupees per share. They said that the view is of around 30% FY25. AUM growth is possible. Guidance is of 26 to 28%. So yes, above that mark. But today when you're looking at the stock, it's subdued in trade. Look at it. It's seen a decline of 1.8% as of now at the day's lowest point. So why is the stock falling? We managed to speak to Vidanta also on Bajaj Finance today. Let's go across and listen into his rationale on the Q1 update and what he believes is the actual move that one could expect from Bajaj Finance.
Bajaj Finance typically, the RBI has not been very soft on the whole retail lending pack. If you look at the regulatory tightening action, which started with, HDFC Bank being barred from credit cards, and then a lot of institutions were, punished or, given warnings by the RBI. So see, one is we are not yet over on that front, as in, the retail part of overheating and RBI getting comfort with the KYC and the retail lending practices. I think there is still a quarter or two more before that happens. Second is Bajaj Finance. There's a lot of deposit repricing that is happening in Bajaj Finance. So while the growth is good, there's absolutely no complaint. I think margins will be a little soft this quarter specifically. And that is why probably Bajaj Finance does not react to these growth numbers. And it's not just this quarter. It has not been reacting to good growth numbers for many, many quarters. But having said that, I think there's 3 years of time consolidation which has happened. The earnings and the new businesses, the new products have started contributing. So I think we are just 1 or 2 quarters away from where Bajaj Finance should actually become the best pick in the financial space amongst the large caps.
All right, let's move out from the NBFC and financial space to the FMCG space. Gaurav, just because Vinny stole the limelight from the financial space, you've decided to take FMCG space instead?
Well, we could say that, but there is another buzz in this because Morgan Stanley has come up with the tactical ideas on 4 companies, which is Titan, Britannia, Tata Consumers and HUL. So for Titan, Britannia and HUL, it seems that Morgan Stanley is being a little bearish here because they believe that the share price will fall relative to the country index over the next 30 days. What they believe for Titan is that they have maintained equal weight to the target price of 3,526 rupees. They believe that we may see weaker production mix from the company. For Britannia, they have maintained the target price of 5,021 rupees, and what they believe is that any weakness in Q1 earnings can actually poses some risk for the stock. And lastly, for HUL, while maintaining their underweight rating and a target price of 1,876, they believe that HUL is going to report lowest top line and bottom line growth. and they also expect management to remain keep their stance unchanged for FY25. Apart from that, when we talk about Tata Consumers, there they have a little bullish view, we could say, because they have maintained their overweight rating and a target price of 1288 rupees. What they believe is that this share can actually rise if we compare it with the country index over the next 30 days, because company may deliver improvement in organic top line growth, and lastly, market will be willing to pay premium for this stock. So definitely these are the stocks which could be in focus, because Morgan Stanley has actually given some kind of tactical ideas for the next 30 days on this stock.
All right, let's shift focus. Let's talk about Lupin then, and that particular counter is seeing a sharp up move in trade today. In fact, it is trading at an over 1 month high as we speak, and one of the reason, or the primary reason for this up move coming in for Lupin, is that Kotak Institutional Equities has actually gone ahead and double upgraded the stock to a add rating from a sell rating. They've set a target price of around 1,805 rupees per share from erstwhile 1,400 rupees per share. They're saying the strong trajectory to continue till FY26 amidst a stable pricing of generic drugs in the United States. They are also saying they're expecting a 12% and an 11% year-on-year growth from US sales in the year FY25 and FY26 respectively. What else is they're saying is that their add rating signifies that the stock is expected to deliver 5 to 15% returns over next 12 months, and that's why they have actually gone ahead and increased the target price of the company. So watch out for Lupin. Along with Lupin, actually the entire pharma space is above. The Lupin 7% uptick on the double upgrade coming in from Kotak Institutional.
Surely keeping an eye out on Lupin, but let's move on and talk about chemicals and fertilizer side. We have Deepak Fertilizers that you've picked out for us, Aamar. When you look at it in the last 1 month, almost a 40% return is what the stock has managed to give. Before that, chemicals was not doing something exciting. This run-up is expected to continue?
I would say if you look at the chemical space, we're seeing some very sharp move there as well. And talking about Deepak Fertilizers, what we saw was that the stock in the month of December had rallied towards 715, and then it had corrected all the way towards 500 levels. And recently also on, I would say 20th June, the stock had made a high of 750, and then it corrected towards 650 levels. Again, we are seeing a breach of that 750 level. And that also is because the 750, when it had touched, that was on significantly heavy volume. So taking that out, and if you look at the intermediate term trend, there we are seeing a strong bullish momentum that is likely to sustain. Even on the long-term charts, we've seen a multi-month break of the stock. And if we go back in time and look at the stock at a point of time in October of 2022 had made a high of almost 1,062 levels. So sustaining above the 740, 750 zone is something which is very important and critical for the stock. Sustaining above that levels on heavy volumes, the stock has a potential to rally towards the 1,000 mark. So I would say definitely keep a close watch on this stock.
All right, keep a close watch on Deepak Fertilizers, but let's talk about GT&D. Dinesh, this one is soaring in trade.
T&D is soaring in trade because they have received 2 orders. So first order is from Grid Solutions Middle East FZE Dubai. This is for supply and supervision of high voltage products worth around 26 million euros, and the execution time period for this will be about 2 years. Also, the second order is from Grid Solutions SAS France, and this order is again for a supply of supervision high voltage products, and execution time period for this is 2 years, and order is worth around 64 million euros dollars. So 2 orders coming in from Grid Solutions, and if you look at stock price, it is trading at all-time high. Earlier it was at locked in upper circuit of about 5%. Right now holding on with the gains in excess of about 3.5%.
Okay, surely keeping an eye out on that stock. But Cheryl, I have managed to pick out one of the FMCG names at least. I've not got to take everything from the FMCG side, but Dabur is what I've kept for myself. Now Dabur is in focus. Why? Because we have 2 notes that have come in. One was the Morgan Stanley tactical note, otherwise, and the other one was JP Morgan note. Both are quite contradicting when you look at it. JP Morgan, now they've downgraded the stock to a neutral from a previous overweight rating. They've hiked the target price to 580 rupees, but they have downgraded the stock. They believe that the risk reward that has turned unfavorable, and this is post the sharp rise that they saw coming in over the past month. We had seen the rally that came in for all these FMCG names, post just once the election results were announced around that time. We saw that run up coming in, but after that the risk reward is unfavorable for JP Morgan. On the other hand, what we are seeing from Morgan Stanley, they're maintaining the equal rate rating target price of 500 rupees per share, and they believe that the share price will rise relatively over the next 30 days versus the Nifty when you compare it, or the country index when you compare it. And they believe the beverage portfolio, that will do well, that will benefit them. Weak base is there for that portfolio, and overall they believe that there's a gap between urban and rural. That means they expect that to start benefiting the company. So contradicting views there, keeping an eye out on Dabur. As of now, just holding on to muted gains of almost 0.2% in trade right now.
All right, so that is Dabur for you, that is in focus. But NBCC, how is this one looking on the charts to you, Aamar, given the fact it's the PSU counter with the rest of the PSU part? Solid returns is what NBCC has logged in, and after that consolidation is seeing a spike as well. What's your take now? What's the path forward?
Looking at NBCC had gone in for a consolidation because if you look at this particular stock in the month of February, second week of February, it had made a high of almost 176 levels, and then when we witnessed the sell-off happening in the mid-cap, small-cap, the stock corrected almost to 1,106. And what we are seeing over the last few trading sessions, that the stock has gained momentum and also in significant volumes, and the highs which earlier was acting as a resistance around 170, 175, 176 levels, that has been taken out, and the stock is trading currently around 182 levels. On a weekly basis, it's up almost 15 to 16%. Yearly gains are close to 20% plus, and the momentum is very strong on the long-term charts, and the intermediate term trend also we are seeing some sort of bullish momentum. So this is one stock one can definitely keep a close watch on, because the stock has taken out a major zone of resistance that was 175, 176, that also in December. So after 6 months, the stock is taking out that level. So that significantly means that the stock has an upside potential. Anywhere it could rally towards the 195 to 200 levels. On the downside, the stock has got now good support coming around the 160, 165 zone. So this is definitely a stock one should keep a close watch on.
All right, so that's the take coming in on NBCC. On that note, we slip into a break on this edition of Market Fatafat. More stocks on the other side. Don't go anywhere. Welcome back. You're watching Market Fatafat on ET now. Let's talk about Brigade Enterprises. This particular counter is in fact gaining for a fourth consecutive session in trade today. It was trading higher by about 3.2% in today's trading session, and the reason why Brigade is in focus is because they've said that they've joined, they have actually signed a joint development pact with one of the companies in order to develop an 8-acre residential project. So what they've done is that they've signed a joint development for a residential project in West Bangalore, for a gross development value of about 1,100 crore rupees. They're saying that the project is located at Timkul Road and also is spread across 8 acres and has development potential about 1.2 million square feet. Apart from that, the company has another announcement that they have made, and this is about another project of theirs which they've launched. This is Brigade Insignia, which is a premier or rather premium residential project in Bangalore, and this has revenue potential of about 1,100 crore rupees. So because of this, you can see Brigade gaining for fourth consecutive session.
Okay, surely keeping an eye on Brigade Enterprises. But Aamar, on the technicals, you've picked out fine organics for us. What are the charts indicating for this one?
Yeah, I would say that fine organics is forming a, I would say, important pattern. And also, if you look at the charts from a medium-term perspective, the stock had made a high of 5,100 in December, and prior to that, the stock had made a high of 5,000 levels again. And if I go back in time, in June of last year, it had made a high of 5,077. So that high has been taken out, and the stock is sustaining above the 5,200, 5,300 levels. Currently, it's around 5,300 odd levels. Having said that, if you look at the stock over the last 4 or 5 trading sessions, we've seen some significant increase in volume and delivery quantity in the stock, and also on the monthly charts, the stock has taken out a key zone of resistance and is inching towards one of the major indicators flashing a bullish signal. So the stock now needs to sustain above the 5,000, 5,200 level. That's going to act as a very strong support base. Sustaining above that level, the stock has the potential to witness a significant rally. Anywhere between, I would say, 8 to 10% rally is possible once the stock sustains above the 5,200 levels.
All right, let's talk about Suryodaya Small Finance Bank then. Gaurav, have they also come out with their quarterly updates?
Well, yes, Suryodaya Small Finance Bank has also come out with their quarterly updates. And if you look at this counter, this is one of the very few counters today from financials who is trading in green. And if you look at the update also, that came very strong. So deposits increased almost by 42.2% on a YY basis. And even in deposits, when we talk about CASA, that increased almost by 68.5%. When we talk about retail deposit, actually the deposit growth was led by retail deposit, which increased almost by 48.2%. And on the advances side also, we saw a strong growth. So advances increased almost by 41.8% on a YY basis. We also saw asset quality improving for the bank, because if you look at GNPAs, now those have come down almost by 460 basis points, and now they stand somewhere near 2.67%. If we look at some updates from Q4 also for the bank, Suryodaya Small Finance Bank was one of the strongest bank with advances and deposits growth, and the trend has continued even in Q1. On back of this, if you look at the stock performance also, in the morning it was up almost by 4%, but still it is holding up on the gains of 2.5%.
Okay, surely keeping an eye out on Suryodaya Small Finance Bank. But let's move on, talk about Wipro, which opened up on a positive footing but has given up all those gains, trading with cuts of almost 1% as of now. Why is that so? We did have a note that came in from Citi this afternoon, maintaining a sell target price of 455 rupees per share. They have they've opened a 90-day catalyst watch, which is a downside catalyst watch. They see multiple risks to the high investor expectation that is they're building in for Q1 FY25. They see a slow recovery ahead, sharp price move they've seen in the share price move. That is already factoring in the positives. In the recent time we saw that jump up coming in. So they believe the management churn is something that could impact the revenue growth in the medium term, as well as the recent buybacks. They have not aided the IT service stock much, is the word coming in from Citi. So yes, that is why they're maintaining the sell, and a 90-day catalyst watch with the downside is what they're expecting here, and that is why the stock is down today.
All right, so that is Wipro for you, that is under pressure. Gujarat Gas, Jinay, why is this one in focus?
Yes, so Gujarat Gas is focused on the back of two brokerages notes. So first is UBS, which are maintaining their neutral stance on the company with the target price of Rs 610. What they say is that industrial price hikes will be passing through a higher cost of LNG, and this price hike could divert some of the volumes towards alternative fuels such as propane. Now the company is trying to balance margins and volumes as the LNG cost inches up. Also, if we talk about the second note is from Citi, who are maintaining a sell rating with a target price of Rs 500. What they are concerned with is company's recent strategy to compete with alternative fuels such as propane, and also recent recovery in Mobi's volume could once again reverse on the back of price hike is what Citi believes. And on back of that, if you look at companies trading right now with the cuts of about 0.7%.
Okay, surely keeping an eye out on Gujarat Gas, but Sharad, we also have solar industries, which is specifically in focus today. A specific reason we're keeping an eye out
Well,
on
this one has actually been in focus of late, Vinny. If you look at the way how the stock has been performing over the last few trading sessions, also the stock has seen a sharp up move. Today is trading higher in excess of about 3.5%. Fifth day of gain, like I mentioned, it surged about 20%. This is in MSCI Global Standard Index inclusion at May end. ICICI Security has gone ahead now, hiked the target price to the highest in the street. It's coming at around 13,250 rupees per share from 11,000 rupees per share, maintaining a buy stance on solar industry. They're expecting the explosives makers defense revenue to get a boost from the domestic demand and exports as well. Remember, this is after Indian Navy's successful certification test for 3 of new solar explosives with high performance, lethality. This is what they had actually put out as well on various agencies, the video or demonstration of those explosives. So post that, the stock has only seen one-way move, and that has to be upward move. A fifth day of gain, solar industry trading high above 3.5% now.
Absolutely. Let's move on to the next stock, and Sonata Software, Aamar. That's the one you picked out for us. In the last 6 months, obviously there was a time that we saw that correction coming in. But specifically in the last 1 month, an uptick that has started. Do you think that is something that will continue now for the stock?
So if you look at Sonata, what we've seen that the stock has witnessed some significant correction and erosion in investor wealth from almost 870 levels in I would say March, and as low as 470. Currently it's around 640 levels. If I look at the stock, it's moving out from oversold territory across different time frames. On the intermediate term or the short term, we are seeing some sort of bullish sentiment being displayed on the charts as well, and also some sort of overall more than average increase in the volumes and delivery quantity. So the stock has one important level to watch out for, I would say 650, 660. That's a very crucial and important zone of resistance for the stock. So the stock has today, if you look at it's retraced from the 657 odd level. So 650, 660, I would say take it as 650, 665 zone. That's a very strong zone of resistance. Taking that out, then the stock could rally towards the 700 levels. Otherwise, the stock could go in for consolidation. So watch out for the level which I have just spoken about.
Okay, let's move on to the next stock. And Jinay, Vidanta, this one is also in focus on the back of a Q1 update.
Well, yes, it's focused on the back of the Q1 update. So if we talk about alumina production at their Lanjigar facility refinery, it stood at 539 kilotons, which saw an improvement of 36% year-on-year basis and 11% sequentially. Now, this performance was mainly driven by the new capacity additions. Moving on, if we talk about the mined metal production, it saw a marginal improvement of about 2% year-on-year basis, and the aluminium production also stood up around 3%. But on the flip side, the saleable silver production saw a downtick of about 7%, which stood at 167 tons, and oil and gas gross production saw a significant downtick of about 11% year-on-year basis. And if you look at the stock price, then it is trading with an excess of about 1% gain.
Alright, so that is about Vidanta, and that is indeed the last talk in this edition of Market Fatafat. Thank you so much, Aamar, as well as Jinay, Gaurav and Dhwani for joining us on the show. On behalf of Vinny, myself and the team that put the show together, thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.